Charles Goddard here. Just wanted to take a couple of minutes of your time to talk to you about using stops, protective stops, stop losses, trailing stops, those kinds of things. They're an important part of trading if you're going to keep trading and get the most out of your trades. Now we touch on this in the workshop that is the foundational workshop, and I can't stress enough just how important it is. So let me just give you a quick idea of what I mean. Okay, so that's me, and we're not going to talk too much about that at this time. I'll go through things a little more in the at the class. It's not that I'm being modest, even though Churchill would say I've much to be modest about. Okay, we're going to use this slide of Apple as our example. Now at 71, around $71, I think it's 71.61.81, something like that. You can see that that is where we would, based on our method that we're using. Again, I'll touch on that in the class. That we would place a buy in there at just above that level. And so now as soon as we place a buy, now in my case, what happens is I have conditional stops. That is when a trade is executed, the stop is put on right away. And I would urge you to follow that same discipline. So then the question comes, where are we putting our stop? And you can see a red horizontal line where we would put our stop at 58.36. Now the question then you're asking is, well, why there? And it's because that is a support level. And what makes that a support level is that the bulls and bears, the buyers, the sellers, supply, demand, whatever you want to call it, is in equilibrium right at that point. And so that has created a support level, and we go through that in depth because this is a concept that's vitally important for you to understand. And the what else is important is that everyone else who trades knows that just under that level there are a lot of stop sells building up. In other words, a lot of other people have put their stop losses there because if the price drops below that level, because it is a support level, it means the trend is in jeopardy. So this is why we've got our stop there, and that's why a bunch of people have got their stops there, and that is why when those kinds of levels are broken, quite often you'll see the price run. So now we've got, as we get into our trade, the price goes above 71.81, and we would explain to you how we do stop buys in our class, and the price rises. We get a little pushback from 99.59, and it's a big enough percentage, again we'll discuss that, to make us think about adding another position. So we will add another position, that's pyramiding. That will be in video 2 of this little series of mini videos that I'm sending to you, and we would get in just above that black line that you see there at 99.59, and our stop would be at that red line at 87.87, and we would bring our stop on our first position up from 58.36 to $87. And so by using a stop, we have now secured some profit. We still have two positions, but one of our positions now, not only is it risk-free, but we have also solidified and guaranteed a certain amount of profit in that first trade by using a stop. And so we are now into two positions, and the price continues on up. The black vertical line represents a warning given to us by our rate of change that all is not well, and we put a trend line on, and our next protective stop for both positions would go just in underneath that trend line. And when the price drops below that level, we are out of this trade. Both positions are out, both positions are profitable, and it's job well done by us. That is just a very quick synopsis of stops for you. In the workshop, we're going to go through trailing stops, which is what I would use, especially on position 2 of this trade. So we'll hopefully I'll I'll get to be able to explain that to you in the workshop that's coming up. Okay, so our startling conclusion here is use protective stops with every trade, and I mean without exception. It's part of the conventional wisdom that if you let your winners run and you get out of your losers quickly, you can be wrong 60% of the time and more and still be profitable. You need this discipline. It needs to be part of your process. It'll keep you trading and protect your money, protect everything. You need to do this. And so that's our startling conclusion. And we go through this in the workshop. It'll be part of the foundational lesson that you learn. If you've got any questions about this, feel free to drop me a line. I'm happy to answer any questions. And there's a link there for you to go see the details of the next workshop and registration. And so you can do that there. You may, I'm not sure if it's a live link. You may need to copy and paste it. But I hope that you will take this to heart, even if you don't join for the workshop. I hope you'll pursue the stop aspect of trading and stay around longer and not suffer the ups and downs of open trades. Okay, well, thank you for listening, and keep an eye out for the next 2 mini videos to come your way. The first one will be about pyramiding, and the one after that will talk about a candle pattern and how to use it. So thank you, and bye now.